If there's one thing that Donald Trump loves more than gold-plated faucets, it's tariffs. And if there's one thing the global economy loves more than stability, it's chaos. Put the two together, and you've got a recipe for economic pandemonium that would make even Gordon Gekko sweat. But amidst the chaos, one thing is shining brighter than ever: gold. The precious metal, long considered the ultimate safe haven, is having a moment. And it's not just because it looks good in a vault. Let's start with Trump. Love him or loathe him, the man is a master of economic disruption. His latest round of tariff threats: 25% on steel and aluminum, 10% on Chinese imports, and a smorgasbord of other levies has sent shockwaves through global markets. The irony? Tariffs are supposed to protect domestic industries, but they often end up being a tax on consumers. Make no mistake, tariffs are essentially a consumption tax. So while Trump might frame them as a way to stick it to China or Mexico or Canada, it's really the American consumer who's footing the bill. And when consumers pay more for goods, GDP takes a hit. When GDP takes a hit, central banks step in. And when central banks step in, they do what they do best: print money. This is where gold comes in. As central banks around the world ramp up their money printing machines to fill the economic gaps left by tariffs, inflation becomes inevitable. And when inflation rears its ugly head, investors flock to gold. It's a tried and true pattern, as old as economics itself. But this time, it's playing out on a grander scale, thanks to Trump's relentless tariff talk and the global economic instability it's fueling. Enter the Bank of England, the world's second largest gold custodian. Normally, the Bank of England is a staid, respectable institution. It's the kind of place where people wear bowler hats and sip tea while discussing monetary policy. But lately, it's been more like a Black Friday sale at Walmart. Traders are lining up to withdraw gold bars, creating weeks-long queues and causing the bank's gold to trade at a discount. Yes, you heard that right. A discount. Gold at the Bank of England is currently trading at $5 an ounce below the spot price. Why the discount? Because everyone wants their gold out of the Bank of England and into the US, where prices are surging. The fear is that Trump's tariffs could make gold imports more expensive, so traders are scrambling to get their hands on the metal now. The result? A logistical nightmare for the Bank of England and a boon for anyone who can get their hands on discounted bullion. But this isn't just about tariffs, it's about trust. The Bank of England has a history of refusing to return gold to its rightful owners. See Venezuela. And countries like Poland have been quietly repatriating their gold reserves for years. Now, with Trump's tariff threats adding fuel to the fire, the rush to withdraw gold from the Bank of England looks less like a market anomaly and more like a full-blown bank run. While retail investors are busy selling their gold to buy Bitcoin, more on that later, central banks are going all in on the yellow metal. In 2024 alone, central banks purchased a net 333 tons of gold, a 53.5% increase from the previous year. Countries like Poland, Hungary, India, and Turkey are leading the charge, with China suspected of quietly amassing even larger reserves. Why the buying spree? Because central banks are losing faith in the US dollar. As Trump's tariffs disrupt global trade and the Federal Reserve prints money like it's going out of style, the dollar's dominance is waning. Gold, on the other hand, is nobody's liability. It's tangible, scarce, and historically reliable. Qualities that make it the ultimate hedge against economic uncertainty. And I gotta say, I feel like the left is confused here. They want to hate Trump because he's Trump and stands for everything they hate. But when you break tariffs down in simple terms, it's something they would probably support. If Bernie Sanders had have proposed the tariffs, the left probably would have embraced them with open arms. Why? Because tariffs, like government jobs, prop up a small portion of the population at the cost of efficiency. Yes, in essence, they support middle-class jobs at the cost of the aggregate economy. They're a way of picking winners and losers, something that socialism ends up doing when practice meets theory. The irony is that tariffs, while ostensibly designed to protect domestic industries, often end up hurting the very people they're meant to help. Take the auto industry, for example. In the 1980s, Michael Moore lamented the loss of manufacturing jobs in Michigan. Mexico was offering to produce auto parts and assemble vehicles using their comparative advantage: cheap labor. It resulted in thousands of Americans losing good-paying jobs, families being kicked out of their homes, and women eating pet bunnies. You gotta see the documentary, it's a little deranged. Anyways, there were really only two ways to stop jobs from leaving America and going to Mexico: tariffs or incredibly large subsidies that would turn auto companies into welfare queens. Well, tariffs might have saved some jobs in Michigan in the short term. They also made cars more expensive for consumers in places like Arizona. When cars get sold for less at the cost of jobs, those savings end up spent elsewhere in the economy. But let's be real. A major portion of those savings saw that money funneled into products from China and other low cost countries, hollowing out the middle class. So, where does this leave us? With the global economy teetering on the brink of stagflation, central banks hoarding gold, and Trump showing no signs of slowing down on his tariff talk. The stage is now set for a gold rally of epic proportions. Gold isn't just another commodity, it's a macro hedge against economic instability. But here's the kicker. While institutional investors and central banks are loading up on gold, retail investors are selling. Americans are redeeming their gold ETFs and physical bullion at record rates, opting instead to chase the latest crypto craze. It's a classic case of the smart money buying while the dumb money sells, a contrarian indicator if there ever was one. In the end, gold's rise isn't just about tariffs or central banks or even Trump. It's about trust. In a world where fiat currencies are being debased by endless money printing and geopolitical tensions are running high, gold remains a constant. It's the ultimate safe haven, the one asset that has stood the test of time. As for Trump, well, he may not be slowing down on his tariff talk, but one thing's for sure, he's giving gold a run for its money, literally. All right, everybody. Thank you so much for taking the time to watch this video. If you have any thoughts on gold stories I should be following, please let me know them in the comment section. Also, if you haven't subscribed, we appreciate all the subscribers we get, all the likes we get, all the engagement we get. And I really just sincerely want to thank you for taking the time to watch this video. All right. Thanks, everyone.